Other central banks are cutting rates already. That's weakening theirs. And if we look at the dollar yen, I think this is, again, the most important chart not talked about by the mainstream media. Look at this, guys. It just keeps going higher and higher. Now, based on this chart, I have it very defined where I expect the Japanese central bank to be forced to come in and intervene. And we have a very clear channel here, right? We have the highs, the lows, the high here. Here's the intervention. We'll put an I there for intervention right there. Then we continue to move up. We actually took out those highs right here, and we're now moving up. This is X marks the spot right there, where I think that even though the U.S. has threatened Japan with currency manipulator status, you likely will see intervention if we get up to there on the dollar yen. And it looks like, honestly, it looks like it could get there within next week or so. All right. So again, the reason why that chart is so important, all right, most people are like, who cares about the weakness in the yen? Well, the reason why it's important is because Japan is the biggest holder of U.S. debt in the world. They hold massive amounts of it. And they hold lots of dollars in that respect too. To strengthen their currency and push the dollar yen down, which would be strengthening the yen, they would have to dump that on the open market or large chunks of it. And that would cause rattling and potentially a domino effect all the way over here and maybe even globally. All right, so just keep an eye on that, folks. Now, going to a couple other charts here, Tesla pre-market. I thought this was really cool here, folks. So pre-market, Tesla is, or I should say NVIDIA is basically slightly negative, down about 80 cents. All of a sudden, we're seeing kind of a weaker structure on NVIDIA. But remember, yesterday, even though NVIDIA was down, Apple was up, Microsoft, Google, I mean, all the other big players were up. Thus, it carried the market up, even in spite of a little weakness. But my point is, this is the chart on a 10-minute time frame of NVIDIA. Now, what I've actually included here is the pre-market data. And when you use the pre-market data, most people think, oh, there's no point to using chart analysis and technical analysis on the pre-market. But what we actually see here is that this was a pre-market low down here. This was a during market hours low. This here was a pre-market low, okay? So my point is that when you have stocks, and this is a tip, guys, this is something that I'm just discovering now myself over the last couple months, and I've been testing it out. If you have high volume stocks, even pre-market and after-market, you actually can chart them using the data. And by the way, same thing up here. I mean, look at this. Look at this. This, and this. This was all pre-market right here. This was a high here. And so what you have is a wedge pattern using a combination of during market hours data and pre-market data. Now, just about 30 minutes ago, I was looking at the volume on NVIDIA. It was already 5 million shares. So what it tells us is there's lots of stocks that don't even trade 5 million a day. And so when you get heavy volume stocks, like when GameStop was going nuts, you could chart it because it had a lot of volume pre-market. In fact, it almost looked like the markets were open. It was trading so crazy. NVIDIA has so much volume in it that you can use these. And what does this tell me? It tells me today as a trader and investor that if we start breaking below 120, that's a breakdown in the stock. In addition, if we look at this, let's look at the daily chart here, guys. So if we look at the daily and we get rid of these other trend lines from the intraday and we zoom in, what do we end up seeing here? We see a bearish pattern of consolidation after a reversal candle. Here's your reversal candle right here. Reversal gapped up, closed lower. Here's your down move with confirmation, and there's your consolidation, which eventually probabilities, and it's all probabilities, guys, but probabilities tell us eventually this should break lower. All right, let's get on to Tesla here. Tesla's a big one here, guys, on the day. This stock was trading sharply higher pre-market after closing strong yesterday. This is now becoming a momentum play. I would caution investors, though, this is not all it's cracked up to be. All right, now I'm going to tell you, I'm going to break this down for you guys. Okay, so number one, Tesla was trading as high as 240 pre-market. It fell to 230, 250. Now it's back to 235 and change. Fine. But if we look at the actual data, and this is where fundamental analysis meets technical analysis. So number one, we are into some big resistance. We know this down-sloping trend line. We looked at oil before. Remember oil? Oil yesterday broke above that level. Well, it reversed by the end of the day. Don't be surprised if that happens on Tesla today. Okay, so it is trading a little bit above this level here, but also we have to look at the numbers. Yesterday, everyone made such a big deal about them beating delivery numbers. I looked at the delivery numbers yesterday after hours. I was like, okay, let me look at these numbers. Well, guess what? They delivered just under 244,000 vehicles in the second quarter. That sounds really good, right? Well, analyst estimates were just under 240,000 deliveries. So they beat by 1%. 1% basically. I mean, that's what they beat by. Now, again, the kicker here is that ultimately, how much did the stock move yesterday? It moved 10%. And if you look at the run in the stock just since in the last week, you have a 30% move up. So does that make sense? The question is probably not. That's why it's a momentum move versus a fundamental move. The fundamentals are not aligning. Now you have technicals also telling you that you could see a pullback. I would not be surprised if by next week we're back in, let's say, the 220 to 215 range on Tesla. All right, so just a couple little tidbits there. All right, on that note, folks, I want to do a drawing for you all. We'll take a look at this on here for our YouTube drawing. And again, yesterday it was smart money stocks and ETFs. I've been putting out amazing videos and content in that service if you want to check it out at Verified Investing. But the person who will win 3 months of smart money stocks and ETFs is AAYAN3938. Reach out to support@verifiedinvesting.com, guys. Support@verifiedinvesting.com. Congratulations, buddy. And speaking of which, let's go over here. Let's spin the wheel. Let's go over here. If we can get the camera on me, there we go. If we spin that there. Oh, good one. All right, 1 minute scalpel, guys. The 1 minute scalpel wins. The 1 minute scalpel is an educational course focusing on smaller time frames. And literally in this, you will find some nuggets of information and techniques that will literally make you into a potential 1 minute day trader. It is incredible. Incredible knowledge. We use it in the Apex Live day trading room every single day. And it literally has made us money almost every single day. It's incredible. So tomorrow's winner will get the 1 minute scalpel, but if you're interested, go check it out. It's only, I think, $299, and it's a complete course there, and it will change the way you look at the markets, no doubt about it, looking at these smaller time frames. I never really looked at smaller time frames until I went into this course here with Dr. B, and it is pretty incredible what we can see and the money movement. It's a lot of institutional action in there, and that's what you see on the 1 minute chart. So definitely worthwhile picking up if you don't have it already. On that note, folks, we're going to take a quick 30-second break to check out Lux Algo. They are an amazing sponsor here. Let's take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, we are back, guys. Let's get right back into it here. Take a look at Bitcoin. Now, Bitcoin should be on high alert here because we are breaking below this little wedge pattern again. Now, on a technical basis, as long as we don't confirm below there, you're okay. If you confirm below this level here, which is around 60,000, you are probably looking at 56,500 as your next technical support. Now, where am I getting that level from? Simple. Keep it simple, guys. Right here. That low, the lowest pivot basically in the last 4 months or so was right here at 56,500. So simply take that level, draw it across, and you'll get that approximate level right there. That would be your next support. Now listen, that's only in play if we close below this line here and confirm. If not, then you give the benefit of the doubt that it's still in there and maybe it can still break out. But again, my biggest concern here, and I've said this for a long time, is that how long can Bitcoin underperform when the stock market remains at all-time highs and keeps seemingly to go higher? What happens when we do get that inevitable 10% decline in the stock market? Granted, it seems like it'll never come, but at some point it will. And how does Bitcoin react? Now, maybe it's more like a digital gold. Maybe we'll see at some point it behave more where it goes up when the stock market goes down. But as of now, that's not the case. It's still a risk asset, and investors that are in Bitcoin can get flustered very, very easily. Listen, not the hodlers. You guys out there, you guys are rock stars. You'll hold no matter what. But there's a lot of new money coming into the ETFs that can get spooked very, very quickly. And I think that's the scary thing for Bitcoin longs. All right. So we'll keep an eye on that. If we flip over, I want to take a quick look at gold. Gold may be on the verge of a breakout here, folks. So I was generally net short-term bearish on this, but the charts are the charts. They always rule the roost, right? And so what we look at here is that you have this wedge pattern. If we close and confirm above this level, then you have to think that we could potentially start our next leg to the upside. Speaking of legs to the upside, one of my favorites, and I've talked about it on the game plan, is Palladium. Palladium is a rock star. If you're in my Smart Money Commodities service, one of our biggest positions long is Palladium here. And look at this breakout that has just started on the Palladium chart. Amazing action here, guys. Look again, down sloping, low end of the chart. There's your breakout above that line. Again, not to say Palladium won't have pullbacks, but you gotta like the fact that you're holding very beautifully now above this down sloping trend line. You held this baseline and it's starting to move up. So congrats to members on that one. Silver today is also pushing up. If it can close above these two lines, you go neutral on a neutral bias. If it confirms bullish, if it doesn't and comes below, it remains bearish. So the beautiful thing about charts is that you just essentially let the charts tell you. If you're above this level, it's neutral. If you confirm above it, it's bullish. If you stay below and you come back below, it's bearish. And that's the beauty of it. You just literally use the trend lines to dictate your bias. So many people out there are so predisposed, oh, I love silver, oh, it's the best thing in the world, it's going to go to $1 zillion. In reality, it may, but there's so many trades in between, and the charts will guide you. Now, listen, they're not going to guide you with 100% accuracy, but will they guide you with 70 to 80% accuracy? Yes. And in the world of investing, you become the casino where over time you make money. Even if a gambler comes in and takes you for a nice chunk of change, you have enough gamblers coming through your doors, you're going to make money. And I was in Vegas. I know, guys. I know. Absolutely. They make money. All right. Next up, natural gas, guys, continuing to show some weakness here. Here's your support level right down here. That's where I would look to buy. Now, again, I'm agnostic, meaning that if it gets down here, yeah, I'll buy it. You know what? If it starts rallying up to this zone here, I'll short it. And that's, again, the beauty of being a trader and a swing trader, and that's what we do here at Verified Investing. Data rules our decision-making. And there's so many places in life, social media, some mainstream media, there's everywhere they're trying to force these fears on you, these greed factors on you. It's so enlightening and kind of calming to be like, you know what? Whatever happens, happens. I'm going to let the charts tell me where to position myself, but only at the time when the charts align. And that's, again, what we allow it to do by learning technical analysis. All right, lastly on oil, guys, this was one of my favorite ones, guys. Oil, you guys know I called this like a three-peat kind of thing, triple moving average or triple trend lines converging. Now, remember, yesterday morning in the game plan, we were above this level, right? We were above this level here. And if we look at this, we can see you were above yesterday, but this is a three-factor setup. Very rare that it would be able to hold above that. What ends up happening, it comes back in, and now it's trading down a little bit. And again, weaker jobs numbers, if we continue on Friday to see this with the non-farm payrolls, we likely will see further downside in oil. I'm actually net short here on oil. I do think that, again, you've now topped out on oil, or at least very close. Unless something happens in the Middle East or something crazy happens out there, you likely are now in a downward momentum move very early on, though. But nonetheless, it's a beautiful example of three trend lines where price tried to get above. A lot of people probably got fooled yesterday thinking it's a breaking out. No. Not yet. Charts still rule the roost here, and that's what we see in the chart of oil. All right, guys, on that note, that really brings us to a conclusion here for the game plan. As always, thank you so much, guys, for tuning in. No game plan tomorrow because it's a holiday, but Friday I will be back. And plus today, trading the close will be at normal time at 3:55. Thanks so much, and I'll talk to you soon. Take care.